60% stock and 40% bonds. Your bond portfolio is 42,000 and your stock portfolio is 72,000. My boys say don't invest in trampolines.
So is this always like kind of the golden rule? You always want to remain balanced?
Wouldn't you want to sell when it's high and buy when it's low?
Get Jill, the wisdom for your will.
Shalom Aleichem, Reb Shulam. How are you?
Reb Chaim, I'm so excited to see you. How are you doing?
Baruch Hashem, I'm doing great. Baruch Hashem. Welcome to another beautiful day in Hashem's world.
Yeah.
And let's try to do the right thing one more time.
Okay.
And see how we can be of service.
That's what it's all about.
Yeah, I tell you what, Reb Shulam, I don't like to mix together two conversations because I want people to be able to take out value from each conversation independently if they listen to other episodes or not.
Okay.
But this time I think I'm gonna deviate from that because I do want to address, we spoke in the last conversation, we spoke about diversification, the importance of diversification. So the topic that we're going to discuss today is a little bit, has a little bit of shaykhs to the topic of diversification.
Okay.
So that's why I want to talk about it, and it's called rebalancing, portfolio rebalancing.
Okay.
So the question becomes, let's say that you do a good job in diversification, and we're not going to make it complicated for this conversation. For the sake of this conversation, we're going to make it sound as the person has 60% of his portfolio in stock and 40% of his portfolio in bonds. Okay, that's the diversification. I'm not saying it's a good diversification. I'm just giving
60
you an
in
example.
stock and 40 in what was the other one?
Bonds.
Bonds. Bonds. Got it. Okay, sorry. I just didn't hear the N clearly, so I heard bonds and I didn't hear bonds.
You hear like bonds, you hear?
I heard like bounce and I didn't hear bonds. I wasn't clear what you were referring
Like
to.
you thought I like bouncing a ball, is that what
Like
you meant?
I thought trampolines or something, you know.
Are you original from England or from Canada?
No. Originally from the Midwest in America.
By the way, I don't know if you know, my parents were raised in Argentina.
I didn't know that, no.
And I have a lot of times people ask me from where my Spanish accent comes. They ask
Yeah.
me if Spanish is my first language.
Interesting.
You know, Goyim, of course. You know, my first language is Yiddish, but they ask me if Spanish, and then I tell them no. Then they ask me, where were you raised? I tell them in New York. No way. How come? What's the question? And they say because you have a South American accent.
I hear. Yes.
And yeah, and and it's true. I have a South American accent sometimes, and it comes because my parents were raised in Argentina.
Wow. Okay. I have a funny story. When I got engaged to my wife and I introduced her to my father, and my father was from Europe. He was a survivor, and she spoke to him for a little while. And I remember afterwards making a comment to me. My wife, she says, I'm really looking forward to get to knowing your father better, but I have to get used to really being able to understand what he's saying. I said, "What are you talking about?" She said, "He's got such a heavy accent. I don't understand it." When we're communicating, we have to realize that what make the way I think I sound, not everybody's hearing what I'm saying, and I had to be careful to ensure that, I'm clear that they get what I'm saying. It's so important, it's such a basic yesod in communication, Chaim. So much
Absolutely.
world wars have been fought over misunderstandings. And it just what you're saying is, had I misunderstood you and I thought you said trampolines and I go and invest all my money in trampolines, in a year from now you'd say, "You're Michigan. I didn't say so. I said bond." So important and crucial that
Yeah, that's why I love to have you as a co-host because you're not gonna let me finish this conversation by people thinking we're talking about trampolines.
okay. So let's take out trampolines off the table.
So trampolines is out. Rabbi say don't invest in trampolines unless you have a good company that's very profitable and you know that they know what they're doing, then we can talk about it. So
We're
let's
there.
get 60% stock and 40% bonds.
Very good. Now it's
Okay.
clear.
Good. And then what happens, let's say this is the ideal diversification that you want for your portfolio, right? So you probably want a few more things, but let's say just for the simplicity, this is your ideal diversification, your ideal portfolio size, your ideal portfolio layout. Okay, now you didn't invest any more money. The stock market went straight up. And by the way, I want to show you something. When I tell you straight up like this, like for the people who hear it, I take my right hand and I move from right to left.
Right.
What did you see?
I see you going from down to up.
But from your, because we're doing this on Zoom, so you look at me, you see it from your left or from your right?
Oh, I see you. I see you coming from,
From
I
your
guess, left to right. Yes.
from left to right, right?
Right.
So when I was, I took some courses, some professional speaking, by the way. I don't know if you know. And
Okay.
and they taught me that when you present something to the audience, you should always present it from right to left.
Okay.
Why? Because the audience, in their eyes, they see you as a mirror.
Right.
So if you tell them, if you show them from you, I'm showing now my right hand. So from my right to left, you see it from your left to right.
Right.
Okay. So it's very important that when you speak to people, you should understand that they see it opposite than how you demonstrate it.
The height. Right.
So you should always do it, you know that probably. You're doing drushas in your shul. You're probably always doing it the opposite way, right?
Well, I don't have that problem because most people fall asleep when I'm giving instructions, so they're not seeing anything.
So I give you a good idea they shouldn't fall asleep.
Okay, I'll remember that.
You should tell them when I'm going to finish my speech, I'm going to ask you all if I demonstrated it from right to left or left to right.
Left to right. I'm
Okay.
afraid what they're going to tell me. Okay.
Okay. So basically, when the stock market, let's say, went up, and the bond market is usually a fixed, it's not fixed, but it's more fixed than the stock market.
Right.
And because the stock market went up so much, could be that you all of a sudden see yourself having a portfolio that is, let's say, 70% stocks and 30% bonds.
Right.
So let's take an example. Let's take $100,000 portfolio. You started with 60%, $60,000 in stocks, which is 60%, $40,000 in bonds, which is 40%. And let's say the stock market went up 20%. So 20 in the first year, 20% of $60,000 is $12,000. So all of a sudden, you have a stock portfolio instead of $60,000, it's $72,000. And the bond portfolio, let's say, went up 5%, okay, just to make a straight number. So 5% of $40,000 is $2,000. So now
Okay.
your bond portfolio is 42,000 and your stock portfolio is 72,000. Now I'm taking a calculator and I'm putting it together. So I have $72,000 plus $42,000. I know you can do this by hand, but by head, but me not. It's $114,000. So now your portfolio of $100,000 is 114, of which 72,000 divided by 114,000 is 63%.
Okay.
So that means that your balance that you wanted to be 60-40, you're off. Now you're 63. It's not off by a lot, but it's still off. But we're going to use that for an example. It could happen in any asset class, and especially if something goes up even more, then it's going to happen. It's going to happen more often.
Okay.
If any part of your portfolio, let's say you want to be 10% in China stocks, and China goes up a lot, whatever, it could happen in any asset class that you should be off with your portfolio.
Okay.
So what do you do? We're going to talk about rebalancing, but before we talk about rebalancing, it's also important to talk about most of the time when something goes up dramatically, something else goes down.
Mhm.
So it's like a seesaw, especially when you talk about the bond market. Usually, when the bond market, when the bond interest goes up, bond prices go down, and vice versa. Okay, we can have a different episode to discuss that, why that is and how that works. Now,
Okay.
because of that, what happens is that all the other asset classes that did not go up so much is much cheaper now.
Right.
So if the other asset classes went down, it's much cheaper.
Right.
So it could be a good opportunity now to go take 3% of your stock portfolio to reduce it to 60% and add it to your bond portfolio to
Because the
increase the
bonds are
bond. So now you're
because the
rebalanced. You're back
right.
to
So
60-40.
you're taking advantage of the bonds being cheaper now.
You take advantage of the bonds being cheaper. You're taking advantage of the stock increasing in value that much.
Right.
So you sell for a profit and you buy for sale.
So is this always like kind of the golden rule? You always want to remain balanced, or in the situation that you described where the stocks have gone up, maybe it's worthwhile to invest even more in the stocks because they're doing so well. I mean, how do you kind of decide when you have to? Is there you always have to remain balanced, or
So
is
you remind me of a good line from Warren Buffett.
Mhm.
Warren Buffett, lately we talk a lot about Warren Buffett. I don't know what mitzvah you
Yes.
did that he has the zechus to be in the Reb Shulam's mouth. Warren Buffett says that the stock market is the only place in the world that he knows that people buy high and sell low. You know,
Uh,
when you are a buyer of something, wouldn't you want it to be cheaper?
right.
And when you're a seller of something, wouldn't you want it to be more expensive?
Right.
So, for whatever reason, when people invest, they get so emotionally attached, and it's usually because they don't know what they're doing, and they just have FOMO. Oh, I'm gonna go and it's gonna blah blah blah. But you see something is going up more and more and more and more. Okay, should I add more? Could be if that's part of your strategy. But if your strategy is long-term financial success, long-term financial stability, and the focus is on being stable and have a good foundation, have a good yesod on it, if that's your focus, then wouldn't you want to sell when it's high and buy when it's low?
Presumably, yeah.
And if you made a decision that you want to be balanced in a certain way of 60-40 stocks and bonds, and you see that the stocks you're out of balance, and you decided that in order for you to have financial stability, it's important for you to have the right blend, the right diversification, why shouldn't you stay with the diversification? That doesn't mean that you would not have succeeded more if you would have been 100% in stock.
Right.
In hindsight, that would be the case. But my job as an investor is not to be correct only in hindsight. My job as an investor is to make sure that I'm stable regardless of what the world throws at me. B'derech hateva, I
Right.
should I should I should be stable.
Right. So I think that's a huge aside, Chaim, that's worth just just reviewing for a moment. But what you're saying is that remaining balanced is really something that has to be a constant throughout. You have to initially come up with a plan, a balanced plan, but that plan has to really be consistent, and you have to stay true to your balance no matter what's being thrown at you. Because, like you said, there's a lot of short-term opportunities that may seem to be very lucrative. But at the end of the day, if you throw that balance off, you may end up losing in the long run.
Absolutely. And I tell you, this is one of the focuses we have with our members, and we always talk about that. That doesn't mean that you should do it every day, because if you do it every day, that means that you're gonna pay a lot of trading costs, you're gonna pay a lot of commissions, and it's gonna become an emotional game. For most people, long-term investors, for most people, it's once a year is enough. You don't have to do more than once a year. When you do your review, your annual review, maybe beginning of the year, end of the year, whatever you decide. For most people, once a year should be enough. If something you know extraordinary happened during a certain quarter, you might look at a quarter. But usually once a year should be more than enough. And the example I gave you, 63 stacks, that it went up and it became 63 stack and 37 bonds. I didn't give it to you because you should think that it's out of balance and I have to rebalance. No,
Right.
it just, I gave you the example to understand what I mean. I wanted to give you with
Right.
simple numbers, and I
Right.
also did it only with two things: stocks and bonds. But you can do it with many more things. If you diversify a portfolio like you should, then a lot of other asset classes come into picture also. You wanted to be such and such percent and exposure to this market, and now you are much higher than that. Maybe it's time to rebalance. The
Right.
point is that your financial picture doesn't have to be set in stone. This is what I decided. This is what I do. And I close my eyes, I get into it, and I don't want to look at it anymore. This is not how you should operate your finances. You should have an active role in managing it,
Right.
but not active daily. Active from time to time, maybe once a year, as we discussed.
Right. Listen, I mean, I think what you're touching on is really you said in general, and everything in the world is balanced, and the world doesn't function if it's not in balance. And listen, we're Parshas Bereishis is all about the balance of Klal Yisrael. So I think
Right. I
you're.
thought you were going to talk about Yankov Avini with his
Well, I was going to
family
say with the
before Isaac.
Shvatim, that's exactly well with the Shvatim were an example of Klal Yisrael emerging in the world with balance. And that balance is constant. You see throughout history of Klal Yisrael how when there was an imbalance, it had to, it rectified itself. The Shvatim had to work out between themselves how to address it. All I'm getting at is that balance is a yesod, and what you're touching on is it's a yesod in life. It's a yesod in how we maintain our own health in our bodies. We have to keep a balanced, healthy body. And I think you're sharing that the same ideas with finances. You have to be
Good.
intentional
Yeah.
about
You
it.
know, Shulam, I'm embarrassed to tell you, I'm very embarrassed to tell you that somebody left me a message, sent me actually a text, and I forgot to tell it to you. Somebody sent me a text. Actually, I got very good feedback about the podcast in general, but somebody sent me a text specifically that he wants to know how I got the Shulam Friedman for a host. Yeah, he told me that you chose the best host that you could possibly choose, and he's making so. I I don't know. I know I have a little bit of envy, but I just wanted to share this
Well,
with you.
the
Sorry, I
answer
didn't tell
is
it to you before.
the answer is it's because you pick your friends well.
People attract people that they like.
I've always told you that, Chaim. I've always considered you a friend now for a few decades.
Baruch Hashem. Okay, let's leave it with this, and Mir
Okay.
Hashem, next week we'll pick it up from there.
Looking forward. Gewaldig. Yes, you
Atzlocha
can.
Rabbi Reb Shulam.
Okay.
Keep it up. Great job.
Thank you.
Get the wisdom for your well. Get the wisdom for your well.